Retail sales growth in Asia Pacific sharply declined during COVID-19 but has since rebounded to align with global trends. To discuss this, we have Bain Company partners Radhika Sridharan and Melanie Sanders. Melanie, let's start with you. What changes have driven Asia Pacific's retail rebound post-COVID?
Well, we have just published our latest piece of retail research for what has happened since COVID, and what that has meant for retailers, what factors are driving the landscape, and what retailers need to do to respond. And whilst COVID is well and truly in the rearview mirror, it's definitely true that the contraction of COVID on an impact on retail during this period was prolonged and severe relative to the rest of the world, but is rebounding. Why was it so severe in Asia relative to other parts of the world? Well, a lot of that had to do with the fact that we had much longer shutdowns, significant supply shortages, and we are now facing a fairly fragile consumer who is very concerned about the state of the economy, and that means that they're very conscious of their spending at the moment. So it's a much more fragile and turbulent environment that we find ourselves in right now.
Can you explain what key factors have contributed to Asia Pacific's retail rebound post-COVID?
Well, with that backdrop of slower recovery and a lower headroom for growth, we've seen that the market capitalizations of the top 10 retailers in Asia have suffered significantly, largely because of that growth and also the cost of capital rising. But what's been most interesting to us has been just the significant disruption in each of the geographic markets that make up Asia. When you look at the market structures, the large digital players have taken really significant market share from the leaders in each of their markets. So, for example, Shopee, which was sort of nowhere in Thailand, has become the number 2 player. It's gone from number 4 to number 1 in Indonesia. Coupang in Korea has doubled its market share. In Australia, my home market, Amazon has taken very significant share. And so you've seen a real restructuring of the markets during this period, with e-commerce players really taking a very significant part of the market. And that has been quite a significant contributing factor to what's going on with the rebound at the moment.
So I was just, going to build upon Melanie's points that in the light of these significant changes that have happened, we think there are a few common playbook elements that retailers should be looking at to actually capture the rebound opportunity. And I'm going to touch upon three of these in particular. The first one is just a significant opportunity for improving operating margins through smarter buying and merchandising. And we think there's about 2 to 4 percentage points of margin improvement and sales growth that could be unlocked from there. And this is as much for traditional offline retailers as it is for the e-commerce insurgents. The second is continuing to sharpen value propositions. Now, value for money, of course, remains critical for most customers in the region. But increasingly, we're also seeing that integration of social elements into the shopping journey is starting to become critical, and smart retailers are capitalizing on both of these. And finally, looking beyond trade to newer engines of growth and margin improvement, whether it's retail media or payments or new category adjacencies. And our analysis suggests that these could account for as much as a third of incremental revenue and about 50% of profits by 2030. So these will be increasingly material opportunities for retailers.
Earlier, Melanie also mentioned some samples within Asia Pacific. With that, how do APAC countries' priority responses compare to other regions surveyed?
Yes, I think we've of course looked at Asia Pacific itself, which is a very diverse market and different trends that are playing out. And our data actually points to four distinct archetypes of markets that exist in terms of both the current level of retail disruption as well as the headroom for organic growth. So, for example, if you look at India, Vietnam, Indonesia, even China, they have an environment where there's significant headroom for continued organic growth, especially as categories start to become more organized and incomes grow. But at the same time, the retail landscape, like Melanie mentioned earlier, has already been shaken up quite a bit. And there are new insurgents that have emerged quite rapidly. So in these markets, it's key to continue to refine and sharpen value propositions, continue to squeeze out margins from better operations, and also look at capitalizing on M&A opportunities as consolidation starts to happen in the market.
In contrast, other markets which have had much less disruption, another archetype, and have got significantly less headroom for growth than, say, India or China that Radhika talked about. Those markets are really focused on a couple of things, one of which is driving out, a productivity out of their core business, cost efficiency, and so on. Second of all, they are working very hard to look at their assets, and where you've got markets like Japan, where population growth is low and the retail footprint has been very built out, they probably are overstored. And then last of all, as Radhika referred to, all of those sorts of markets are looking for new growth opportunities. And so we're seeing a lot of players in sort of low growth, low disruption markets looking for opportunities in things like data monetization, ecosystem plays, marketplaces, or indeed retail media, as Radhika referred to.
Thank you so much for joining us today, Radhika and Melanie. Looking forward to having you both back on the program.
Our pleasure.
Thank you for having us.
Once again, those were Bain Company partner in Mumbai, Radhika Sridharan, and leader for retail practice in Asia Pacific, Melanie Sanders. For more news, visit retailasia.com.